How safe is your bank? How safe is your broker, your insurance, or your 401k? Dr. Martin D. Weiss and Mike Larson of Weiss Research have just completed an urgent webcast, a public service for investors and savers to give you the answers you so desperately and urgently need. In this free 1-hour video, they will provide you with frank, honest, unhedged answers you need to get yourself and your family through the most devastating financial crisis since the Great Depression with your money completely intact. The following is an excerpt from the program answering questions on the safety of credit in this unprecedented crisis.
Okay, we have several questions here on credit and credit cards. This reader asked, Martin, you've always advocated avoiding debts or paying off my debts. Is that what I should be doing now?
For the most part, yes. Pay off your credit card as fast as you possibly can. After compounding with credit cards, you could be paying interest of as much as 30%. Heck, there was once a time when anyone charging those kinds of rates could be burned at the stake. Also try to get rid of debts with variable rates, especially the debts that are tied to the LIBOR rate, which could go up very quickly. But if you have a fixed mortgage at a relatively decent rate and you don't have an abundance of liquid savings, just make your regular payments. You know, I'd hate to see you get stuck without cash at a time like this. Cash is going to be very important. Cash is going to be king. And the more cash you have, the better. Any more questions about that?
I have one that my friends asked me to write down. Do you mind if I sneak this one in?
Go ahead.
Okay. Many of my friends know that I work with you and Mike, and they've been asking me lots of questions about real estate. And
Sure.
Here's the question. They said, millions of people are skipping out on their mortgages and getting away with it. Why can't I do the same with mine?
No. Tell them don't do that, please.
No. Yeah.
You know, if you don't mind, I'll take this one.
Go ahead.
Stan, instead, they really should go to their lender and try to renegotiate terms rather than just default. I mean, as soon as the lender's persuaded that you may default on your mortgage, there's a good chance today that they're going to work with you.
Mike, I just don't know how long that's going to continue. Right now, you know, we have a culture in this country of laxity about debt. Mm-hmm. The government, the banks, the politicians, they're all looking for ways to keep people in their homes, to forgive and forget, to ease them through this crisis. And I understand. I sympathize with that. I totally empathize with it. But that, looking at it just objectively, that policy could change. Mm-hmm. And it could change very swiftly. Once the economy is down, once money is really tight, you could see some very tough rules and some very tough penalties for debtors.
I don't know. I mean, that's a little hard for people to imagine in America, you know?
Yeah, a lot of things that which have already happened were also supposedly hard to imagine.
That's true. That's true. Interesting times.
Yeah.
Just one more from my friends, I promise. They're asking, can lenders suddenly demand full payment even if they're current with their payments?
All right, here's a good one. As a rule, no, not with first mortgages. But they can cut your credit limit, and that applies to credit cards or home equity lines of credit. And then, if you're over your limit, that can hit your credit scores, and there's nothing you can do about it. So that's another reason why Martin and I really believe you want to pay down your credit cards as soon as possible.
You have been viewing some segments for the Weiss Research Emergency Question and Answer session. To view the entire program right now on your computer, just go to the website on your screen. That's andmarkets.com/TV.